Right, well, good afternoon, everybody, and thanks very much for joining us for this session on how to mobilise capital to fund urban energy efficiency. I'm Paul Brewer from PwC, that firm that Jim McCall assures you delivers value at every turn. And Jim actually assured me that it was the grant that was very small. But I, with another partner, Michael Timar, who you'll hear from tomorrow, co-lead PwC's renewables and energy efficiency business in Scotland, which is a business that covers all aspects through economic and regulatory advice, structuring on transactions, through to financing, executing transactions, and we have out of Edinburgh our UK renewables due diligence capability as well. So it's an area that really does engage our interest, and one of the biggest challenges that's being faced just now is how to move from where we are in meeting the energy efficiency ambitions of Scotland's cities. What I'd like to do is share with you the findings from an event which we held just over 2 weeks ago, bringing together a whole range of stakeholders, which included Scottish Government, cities themselves, utilities, banks, Scottish Water as a very good corporate example of industrial energy efficiency, together with the panellists who are joining us today. We had a very animated workshop for a couple of hours, then a dinner, and a further animated discussion. Just a lot of energy and ideas circulating. And what we were trying to do, and I guess got some success on, was identify some actions, things that will actually change the pace of development, help cities reach their ambitions. So I'd like to really skate across the conclusions for that. Then we have three distinguished panellists whose short perspectives on the workshop and the issues I will invite, and then we'll move on to a Q&A session, or perhaps if we're really feeling energetic at the end of the day, a bit of a debate, which would be great. Just to briefly introduce our panellists, we're joined by Charles Abel-Smith from UK Green Investments. Charles has had a long career as a banker with Kleinwort Benson and BNP Paribas. Latterly, he led the public-private partnership business of Arup, and now he is leading on the non-domestic energy efficiency agenda for UKGI, and has been great at engaging with us in Scotland on the getting some traction and trying to deliver these projects in Scotland. I then have Jonathan Maxwell, who is the Chief Executive of SDCL, has had a long career in finance, and now runs his own financial advisory business, which is focused on environmental infrastructure and investment advisory services to businesses, focusing on energy efficiency, and in particular investment advisory services to UK Green Investments and the Green Investment Bank, helping them find source appropriate investments. And finally, Tony Rose. Tony is the Infrastructure Director at Scottish Futures Trust and leads on this area for SFT, along with other important areas of Scotland's infrastructure. Tony, going well back, I guess, has an energy efficiency background with Dalkia, but also spent a period working for a Big Four accountancy firm before moving to Scottish Futures Trust. So if I can just kick off by, I guess, framing the questions that we were trying to answer. I guess at the workshop we spent a little bit of time just on what do we actually mean by this subject matter? Are we actually talking about the same thing? What are the cities trying to achieve? And then the meat was about, okay, how can you actually move the game on getting these outcomes? What's stopping us? And what's the role of capital? And that order is actually quite deliberate, as you'll see, because the role of capital is very important, but it's not necessarily the first thing that we need to concentrate on. So in very broad terms, what were we talking about in terms of urban energy efficiency? Some of it is using less energy to produce the same outcomes. Some of it's around demand management. But I think rather than run through the list, the point is it is actually very broad. It can include projects to improve the energy efficiency of buildings. It can include generation of renewable energy for use in cities. It can include low-carbon transport, waste-to-energy. But when one actually starts to look at what the cities are trying to achieve, one of the themes that comes out is that it is about helping reduce greenhouse gas emissions, about using a greater proportion of renewable energy in the cities, but it's also very linked to wider policy issues. It's got a role in helping eliminate fuel poverty. If you can create warmer, more heat-efficient homes, if you can provide a constant flow of heat from a district heating system rather than have somebody watching the meter, you're going to help deal with fuel poverty. It's about community and quality of life issues as well. And so in terms of what the cities are trying to achieve, it is decarbonisation, but it's actually decarbonisation, in most cities has thought about it, with a series of other social outcomes, a hope that the consequences of doing this will be a positive economic impact within the city, and quite a big focus on quality of life and how this sustainability agenda can help support that. And turning briefly to capital, some of this is rather stating the obvious, but capital does require investable projects. And when you take that broader agenda that cities are trying to achieve, you've got to actually start focusing to get this moving on individual projects, and individual projects that are suitable for financing. So, to state the obvious, it's essential you have projects that are very well planned, robustly planned and developed, that they are supported. You achieve that through effective stakeholder engagement. You have to have sufficient commercial returns to sustain the finance, and it needs to be in a stable environment so that where there's a revenue side to the project in particular, there's certainty around the revenues which are being used to secure the return. So, of course you need that, but the prize is not just creating the odd investable project. It's how do you achieve these city objectives through getting this up to scale, getting it moving. So for best value and scale, you also need familiarity. I was at an energy efficiency conference, which I think probably about for the first time brought together through COSLA most of Scotland's local authorities to talk about energy efficiency a couple of years ago. And it really was the world of let a thousand flowers bloom. Everybody was looking at this their own way. So they were all trying to achieve very positive outcomes, but there was very little joining up of thinking. A lot of reinvention, and that conference was one of the first occasions where people actually, I think, stood back and said, we're not going to get scale, we're not going to get the levels of activity that we're looking for, the levels of delivery, project delivery, if we all do our own thing. So there need to be consistent approaches. These need to lead to a pipeline of opportunities so that you get some momentum. You don't just need stable regulatory environment, you actually need the stakeholders and the governance environment to back this, and a lot of that is about getting communities to buy in. Some of the things that are involved in urban energy efficiency are invasive of people's homes. They make you use energy in a different way. They make you buy energy in a way that you haven't had to before. There's a big exercise in getting people to buy in to get the momentum, and you'll hear this from most financiers. It's rarely achieved, but keep it simple. So that was a context of the kind of investment environment that we'd like to see. Now, I don't think urban energy efficiency matches up to a lot of that yet. So the session was really about how do we move towards that. So the conclusions that we reached are first of all that cities really do need to be able to set out what they're trying to achieve and explain that to people. And if you're going to get buy-in, you do have to explain why it matters in terms of these social and economic policy linkages, rather than just having a series of projects which reduce consumption of electricity or draw the generation from renewable sources or generate heat as a byproduct of electricity generation. And we also need, and I think in Scotland, better than elsewhere, we get a clear message from central government and a commitment from the public sector backed up by that stable regulatory environment. And for those of you who heard Alex Salmon's announcement, I guess not the first announcement, of the £103 million Renewable Energy Investment Fund, there was a strong emphasis there on renewable district heating, which doesn't necessarily impact highly in the urban agenda, because a lot of the district heating is actually going to be gas-fired, but a lot of emphasis on community involvement and helping fund community involvement in renewable projects. So that aspect there is progress on. Because we had all the stakeholders around the table, we were bringing together utilities, developers' perspectives, government trying to catalyse it, the authorities themselves, and it was actually a very positively strong consensus that this needs co-development of projects. It is not about, and I think it's long past the stage where people think it's about, authorities specifying a project, procuring it, and somebody delivering it. It does need co-development, but that needs an element of understanding of each other's objectives and the way they work, element of trust, transparency, particularly on the cost side, and a business model that supports that early engagement that enables co-development. The authorities, by and large, don't, overall, they certainly don't have the project development skills of the private sector, and at a micro level, they may have pockets, but they don't have it across the piece of what they need. So it's very important that they work together with the private sector bodies, whether utilities integrating people or individual organisations delivering capability to develop these projects early. And that business model needs to allow a continuing partnership. It doesn't work optimally on a project-by-project basis. You need to get partnerships that will endure. And that always bumps into the painful question in government of procurement. Well, if we procure somebody very early on, how do we know we're getting value? Can we actually do that? Do we have to re-procure? There were a few battle scars, the private sector around the table, that we invested our intellectual capital and then got procured out of it. So I think there are good examples already in Scotland. For example, the hub structure that's used to develop social infrastructure in a collaborative way between different authorities and the private sector. There are programs like that demonstrate that this can be achieved. It needs to be adapted a very long way for the energy efficiency environment, but nonetheless, it demonstrates that the partnership model, I think, can be made to work. In terms of structuring, again, you've got to get away from everybody doing their own thing. I think in terms of actually making it coherent, keeping it simple, you need a relatively small number of understandable business models that people can work to. Ideally, those that bring partnership in at an early stage. And if you can do that, then you will be able to use the early quick wins. And I think one of our participants in the discussion about offshore wind earlier on was talking about how there are areas you can get very quick wins, such as low energy street lighting, that give you very quick payback and can help catalyse other projects. So you need business models that encourage a sort of holistic view that you can bring in the returns from early projects to help catalyse the ones that are more difficult. The public sector's covenant its credit from a lender's point of view is very strong, so you've got to take advantage of that with the public sector supporting projects with that covenant where it's needed, and helping. There is a lot of long-term energy demand in cities themselves, in the municipal authorities, as well as the people that live there. And again, that is a very strong cash flow, for example, in supporting investment in street lighting. But the conclusion was that actually we don't have the privilege of a financing gap yet. There's still a lot to be done to structure investable projects. And to get there, you do need to both pick up on the project development points I've raised, but also help people understand, help them understand why there are invasive things going on in their homes to improve energy efficiency, why they need to buy their power in a different way, or why there's an advantage, why perhaps street lighting in certain areas is turned down at quiet times of night, and also locally need to engage the local supply chain to capture the economic benefit locally. And a lot of the contractors who can probably give support to this market don't really understand it yet. So there's an education program to be undertaken there. So that, I guess, was the skate across the top of the session that we ran. I'd now like to invite Charles and John and Tony just to give their perspectives on what on this subject area and what they took away from the event that we ran.
Shall I kick off?
Charles, if you'd like to.
Well, so what I'll do is just give you, I guess, a perspective from my own role, sort of within UK GI, and I guess some of the things that we're doing in practice to sort of help address the issues that Paul alluded to, for which there was very general agreement around the table. I guess first of all, just to sort of clarify where we see our focus of activity. So I've got the non-domestic energy efficiency brief within UKGI. So that covers non-domestic building, retrofit, both public and private sector. It covers city infrastructure, so we're talking about heat networks, street lighting. And it also covers industrial energy efficiency, and I guess in the context of the topic for this debate, discussion, that's industrial energy efficiency that relates to urban energy efficiency. It's unlikely that the initial sort of investment brief will include transport, which clearly has an important part to play within urban energy efficiency, but that will be outside scope for the GIB, and then domestic energy efficiency again, which is an important element. I mean, that is really dealt with through, I guess, the government's programme over Green Deal. So I guess we've got sort of two aspects that we're sort of trying to develop. I mean, I guess the first is, Paul alluded to the fact that there's not much of a financing gap at the moment because of a lack of deal flow, but I guess there is limited financing capacity for energy efficiency in the market, and that's partly because there isn't much of a market at the moment. The first sort of intervention that we developed in the market for energy efficiency was to run a funding competition, where what we were looking for was, I guess, providers of what we call educated capital, people who understand, what it takes to do to generate financing business in this market. And I think one of the particular features of energy efficiency, you do need a good understanding of technical, commercial, as well as financing skills. So we ran a competition which concluded in the early summer, and we've appointed two fund managers. And we selected those fund managers because there were two key selection criteria. One was their ability to generate a pipeline of deal flow and to allocate capital efficiently to that pipeline. But the other of critical importance was their ability to attract third-party capital, because they will only get to use the money that we commit if they raise an equal or greater amount of capital alongside our funding on the same terms. So we've committed £50 million to two funds. I'm delighted that Jonathan represents one of them, SDCL, and the other fund is Equitic. So they've got the mandate to go out and invest the money that we've committed and raise capital, over the next 2.5 years, so we're giving them every support to achieve that. But actually, that's only solving part of the problem. The bigger challenge is how do we get the market to develop a significant pipeline of investable deal flow. Finance, as Paul said, is not the biggest issue here. There's a whole host of barriers which differ depending upon the sectors that you're covering, but it's a combination of technical, commercial, and development skills. Now, I think we see that the public sector has an important role to play in helping to pull the pipeline together, but the development skills lie primarily in the private sector. So the challenge is really how do we, create the architecture to enable that pipeline of deal flow to be created and the efficient sort of replicable models to be achieved. We've, over the last sort of 10 months, been, trying to identify across the UK, early adopter sort of city regions, local authorities, with whom, we can develop those replicable models, and we've been doing a lot of work in Scotland, where we see a particular opportunity, led by, the enthusiasm within Scotland, with the location of the GIB's headquarters in Edinburgh, a desire by Scottish Government, as we heard from the First Minister this morning, for Scotland to sort of punch above its weight in terms of activity with the GIB. We want to capitalise on that enthusiasm and really help to sort of create the architecture that is going to generate, an interesting and sizable deal flow. And we'd be absolutely delighted if Scotland is able to produce a significant proportion of our energy efficiency investment opportunities. And actually, there's a sort of a technology export sort of opportunity here. If we can crack the problems more effectively in Scotland, then there's a great opportunity to roll out the solutions elsewhere across the UK and more broadly into Europe. So we're very much up for working with the Scottish Environment and actively working with Tony amongst others at SFT on this.
Thanks, Charles. Jonathan?
Great. Well, thanks for the invitation to come and speak to you today. So, what we do, why we do it, how we do it, and the risks we're taking in doing so, and what we're trying to take off the table for other counterparties in 5 minutes. What we do, we run a fund which has been capitalised with £50 million by UK Green Investments, into which another £50 million is moving. We run another small fund to do smaller transactions. So in total today we've got £60.3 million worth of equity capital available for investment in energy efficiency projects in the UK. And that capital available is growing sort of steadily at the moment. What is that capital designed to do? It's designed to fund up to 100% of the capital cost associated with an energy efficiency project in the non-domestic sector, meaning either buildings or infrastructure. If there is a commercial building or a public sector building, we will fund the upfront capital cost of an energy efficiency retrofit, and we'll take our return from the saving achieved from the energy cost. Conversely, if there's a project in an infrastructure asset, for instance, as Charles mentioned, street lighting, again, we'll fund the upfront capital cost associated with retrofitting street lights, say with LED or other forms of highly efficient lighting technology, and we'll take our return out of the outcome of the project, the saving. So that's what we do. Happy to answer any questions subsequently on that. Why we do it, and I will mention this. Generally, from a policy, market and inefficiency, the three key reasons why we do it. From a policy perspective, the UK currently generates about 83 gigawatts of power, and that's falling. We need about 65 gigawatts of power, and that's rising. We heard Ofgem on Friday, and many speakers this morning reference the closing of that gap. And in fact, in 2015, that gap is likely to be at a level which is smaller than the point at which the United States would declare a national emergency. So the UK's got to do something about the supply and demand for energy in the country pretty quickly. It's got two fundamental choices: either generate new power or save it. And we're on the demand reduction side of that equation. Obviously, it needs to do both. We focus on demand reduction. So that's from a policy perspective. Market perspective, why do it? And you'll forgive me for an analogy from the medical sector, because just had my little baby 2.5 weeks ago, so spent lots of time in hospitals happily. Why do I mention medicine? There was an interesting survey released this summer of British business. It said to British businesses, what's happened to your electricity prices since January 2010? A stunning number that came back. 156 British businesses consulted, averaged 58% increase in electricity costs for British business. And they said, okay, of British businesses, how many of you think electricity prices are going down? How many think it's staying the same, or how many think it's going up? What proportion? 3% said they thought they were going down. 3%. So 97% thought they weren't going down. 6% thought they were staying the same, which leaves 91% thinking they were going up. They then said, well, how much are they going up? And they said, well, 58% actually said that they were going up more than 5% a year. So it made me think while I was with my lovely wife about what would happen if we had the same conversation with the doctor. Okay, how are you feeling? Well, not great. Have you got a problem? Yeah, I think I've got a problem. Has it been getting worse? Yes, it's been getting pretty substantially worse for the last couple of years. And do you think it's getting better? No. Do you think it's getting worse? Yes, I think it's getting substantially worse going forward. Are you doing anything about it? And the survey actually said that 4% of British businesses have done something about energy efficiency. So, and then a stunning statistic, which then last question, are you planning to do anything about it? And the survey said that 24% of British businesses were planning to do something about it. So, there's something really important in the market. So the policy needs it, the market needs it. And then very quickly, from an inefficiency perspective, sort of turning point in my career 2 or 3 years ago, having been moaning on about energy efficiency to building owners, a 2-minute conversation with a hotel owner in his hotel. Why are you wasting 30% of the energy in your building? And it was definitely the quickest pitch I ever had, and led on to a major retrofit scheme we are currently running in the Strand for London's 6th biggest hotel. So that's why we do it. It's pretty important for both for all sectors, for public sector, private sector, and frankly to save money. How we do it, very quickly, because I'm way over my 5 minutes, I'm sure. How we do it is that we structure a series of contracts. We will enter into a project agreement with a building owner or an infrastructure asset owner. The project agreement will agree to design, install, finance, operate and maintain energy efficiency solutions. So to Paul's point, we will provide the help as well as the capital to structure the deal. We will then subcontract the works to one of a number of leading energy performance contractors or facilities managers across the country. We will select those contractors based on the lowest cost and the highest performance. It's our funding, so we are at least as concerned about the value for money as our clients. And then finally we'll obviously inject the capital required and monitor and measure and verify the savings going forward. Which brings me on to the risks that we take and the risks that we seek to take off the table. One of the key reasons I think that energy efficiency doesn't happen is it does cost money. Retrofit projects that we're looking at are typically £3 to £5 million in the industrial sector, in the public infrastructure sector, potentially more, sort of 10, 15 million pounds. So there is a level of capital intensity. We can address that level of capital intensity by making the investment and take a longer view than most businesses are prepared to take. So we'll take a 3 to 5 year payback view. on that investment. We're prepared to invest money over relatively long periods of time, so we can be patient capital. We do require a return on our investment, which is appropriate for the risks. So the risks that we take are performance-based, number one. Will the project work? Well, our return is structured out of the savings achieved by the project. So we'll actually take a performance risk on the project. That does mean that the counterparties that we deal with have to be strong enough credits to be able to make good on payments to us as long as the savings are achieved. The second risk we'll take is on technology. Well, we don't actually take very much technology risk. We're interested in commercially proven technologies that are going to generate the saving that we are looking to capitalise. And then the third risk we take is performance. And again, we're really looking for the best contractors in the market. And we're very pleased to have been spending the last couple of years actually working with most of the larger contractors across the country, and I think that's really what's created a market here. We were looking about a year ago at about £40 million worth of opportunities in the UK. That's barely a market when we look at one offshore wind plant 61 kilometres from here. That's a £1.5 billion project in its own right. A year later, that £40 million is about £180 million and growing pretty rapidly. You are seeing a market developing here. And I just bring you back to my second point of why. It makes sense. Government's got to do it. Business has got to do it. It saves money, cuts costs, improves productivity, and creates, in fact, is the cheapest source of greenhouse gas emission reductions known to man or woman, as far as I know. Apologies for the 5-minute overrun.
Okay. Thanks, Paul. I'll try and keep it brief. Just a little bit of background on SFT, Scottish Future Trust, if people don't know. We're an arm's length government-owned company that's got an independent board chaired by Sir Angus Grossett, who's an eminent corporate financier in Edinburgh. And we were established about 3 years ago really to work with both the public and the private sector, look forward to develop and deliver and procure public sector infrastructure projects. And the bit of the business I look after is wider infrastructure, which includes energy and digital and transport and waste, as Paul mentioned. And I think it's quite interesting, we can discuss it later, and it's fitting energy within that context, within the urban environment. Cities Alliance in Scotland is not looking at things in silos, but looking at grouping things together, and how does that fit in with this whole agenda as well, and that's something that we might want to touch on as well. In terms of the energy market, we are mainly focusing at the moment on two specific areas. One is the building retrofit that Jonathan's been talking about there, within the public buildings estate, and also street lighting, which again, something that Jonathan's mentioned. And we've, in the street lighting element, I think some of what Charles was talking about and getting deliverable projects to market and an understanding of what they are. The way we've tried to tackle that is we've actually worked with a couple of local authorities who had an appetite for doing something a bit different in the street lighting sphere, and we've actually funded some business case development work with them, some technical advice and financial, to actually look at what the street lighting initiative could mean to them if they've got energy efficient product. And what's been an interesting thing that's come out of all that is the general sense of there's not many things you can do in the public sector where you spend money and ultimately will actually save money and bring some back. That's not what normally happens. And in this whole area, as Jonathan has given you some examples of, that is one of the areas where you can actually do that. These are spend to save initiatives. And I think there's an element of the messaging and the behavioural and just communication that we talked about at the session we had a few weeks ago. Is that one of the actual key messages that we're sort of missing to really present here? I think it's often seen as a carbon reduction stuff, and it's tree hugging and all that kind of thing. But actually, there's some cold, hard financial things that you can get out of this. And I do think that's whilst the driver is about carbon efficiency and carbon reduction, if you can translate that into saving money and generating income to be invested elsewhere in schools or hospitals or whatever, that's an important part of this whole story. In terms of where we fit in, I mean, Paul came up, looked at working together and the structuring. I do think from an SFT perspective, that's where we see an area for us to get involved in that bridging public and private sector. Paul mentioned the hub structure that's used in social infrastructure. And that really has shown that if you can get a procurement process that gets a developer in early when you're starting to develop projects, private sector will invest in intellectual capital to actually look at the solutions that can be driven with you as a public sector body at the same time, rather than feeling like a lot of them do at the moment. They put a lot of capital in and then they are procured out of the process. So looking at developing structures where you can get a developer on board, you can't ignore the procurement rules, is one of the areas where I think we as an organisation are focusing on and trying to bridge some of the gap that these guys have been talking about, getting fundable projects that developers can really get involved in. And I think the financing gap, as we've said, that's not really the big issue at the moment. First Minister mentioned this morning about an advisory group that's being established to try and work with public bodies to get projects that are fundable. There's good examples of this. It's in London refit contract. Eleanor funding has come in the last year to fund a programme delivery unit that's actually looked at working with public bodies with the resources that we've already talked about to actually build fundable projects and take them to the market to get delivered. They have a framework already there that they can call off in 12 weeks to get the work done. They've invested in this unit. So is that the answer? Don't know. But there's definitely things out there that you can learn from that the public sector are currently doing to say, okay, can we spread that around in different areas as well? So I think I'll leave it there, really. I mean, I think that's where we see our particular focus is around those two particular markets at the moment, and looking at developing structures that we can work with the public and private sector to get these projects into the fundable position that they need to be.
Great. Thanks very much, Tony. John, your story about industry's perspective reminds me of a conversation I had a couple of years ago with the MD of one of the UK's larger pub chains, who discovered a horrific revelation that his air conditioning and heating in all his premises spent half the year at war with each other. And having realised that, basically just tweaking the controls took 20% out of the energy bill. And the awareness that there was a problem led to a very, very simple solution. So sometimes it's just that sense of not appreciating that you can do something about it that's a big problem. Do you have any questions straight away from the audience, or if you give you a moment to think, I'd like to ask each of you for a view on where do we start here? Do we pick a topic that's relatively easier to deliver, like energy efficient street lighting, or is it about actually getting the right structures in each city and driving it at a city level? What's going to be the starting catalyst to get some momentum here?
I think this is a feature. It's a matter of getting sort of learning by doing. I think is the really important catalyst. I think there's just the session we had a couple of weeks ago, Paul, illustrated that from a sort of local authority or from a government perspective, this has got to fit into a long-term strategy. It's got to fit into a 3 to 5 year view of how local authorities are going to address their overall infrastructure needs. And it's not even just about energy, it's about other forms of critical basic needs, infrastructure, assets and services, healthcare, education, transport. But that's the strategic. There's the tactical. And I think once you demonstrate to one building owner or one local authority that something can be done which cuts costs, improves productivity, creates a better environment, is actually economically as well as environmentally positive, and frankly just can be done, then I think you've got something which is replicable. And that's certainly what we find in all of our activities in the energy efficiency space. Getting something done then obviously is the strongest tool that you've got to convincing the next man along.
You've got to create some early successes to generate the momentum. So I guess you start. A good place to start is thinking about the sort of technologies. What technologies do we think have the greatest chance of success, and where are the sort of projects best developed in relation to those technologies? But then there is a locality issue, because actually converting the conceptual project into an investable project and getting it done, and doing it in a slightly different way to the way that it's being done at the moment, particularly in a public sector environment, requires drive from the top of an organisation to create, I guess, the space in which people can do things in a different way. Perhaps take sort of a slight risk in terms of in terms of what they're doing. The geography is important in terms of finding a place where there are the individuals and there is the sort of I guess political environment to actually get something done quickly.
I mean, I think the proving by doing, I think, is a big. I mean, I think in the last 3 years, from an SFT perspective, I think a lot of being able to demonstrate it's worth taking the hassle and the time and the effort to actually get people to collaborate together, which is just difficult to do if you're doing that in the context of an unproven technology or an unproven initiative. It makes it doubly difficult. Whereas if you've got some proven initiatives that are actually been demonstrated to work, that then gets over a significant hurdle around actually asking people to work together. So I do think so with our street lighting, that's exactly what we tried to do. We thought we'll work with some authorities and take them on a journey to demonstrate whether this is a good thing to do or not. And having done that, in that specific case, they are now actually comfortable talking to other people and saying, this has worked for us. They're putting it to their council to make it happen. And then that then generates a swell of comfort and confidence that these things can work. Having got that in parallel, there's a case of saying, well, if we want to expand this, we need to be thinking about the structures that allow you to expand that at the same time. So I think there's a parallel running kind of activity going on in that context.
You need a success catalyst.
I think so.
Yeah. Okay. Andy.
Hi, Andy Kerr from the Urban Centre for Carbon Innovation. Well, there's obviously a mismatch between the scale of urban energy efficiency projects, which typically are the order of millions, versus the typical investment vehicle the investor wants to invest into, which would be tens of millions perhaps. So that suggests we need to aggregate out a series of projects. So two questions. One is, do you see aggregators moving into this space, or would you see your organisations doing their aggregation? And secondly, do we have the tools to properly risk rate multiple aggregated projects without repeating the debacle of the subprime mortgages?
I guess from a UKGI perspective, absolutely we see the need for aggregation. And one of the challenges with energy efficiency is individual project sizes are relatively small. So creating solutions that are cookie cutter like, and aggregation is going to be an important part of that. And that's partly why we've our first sort of route to market was going down the fund manager competition, because very much we see organisations like Jonathan's as the initial aggregators in this market, and that's the sort of bottom up sort of push. I guess we also see a role for trying to help the market to create the sort of the opportunities from the top down to, I guess, bundle opportunities from a procurement perspective. I think we're only going to get to scale quickly if we can actually move from a world where, at the moment, we've got building retrofit operating at a scale of £500,000, £1 million, £2 million. Actually, if we can get bundles of £25 million plus, then we can massively accelerate the market. But that does pose a challenge. How in practice do you achieve that bundling in a manner that works for the procuring parties?
I think in terms of developer aggregation, there's the balance between, do you go for an area, a Glasgow or an Edinburgh or a city, that's looking for an aggregator across a whole range of different products, district heating, insulation, all those things, and have an aggregator that delivers that in your area, that may dilute the breadth of that developer's experience? Or do you go for across different parts of the country along a single product line and say, we'll set up an aggregator across a wider area that just focuses on a particular aspect? And I don't think there's an answer to that yet. I think Glasgow's gone down the wider sustainable city route and developing on that front, and there will be a case for that, I'm sure.
I mean, I pick up on your two questions, and I think I agree exactly with where you're coming from. Number one, yes, these deals need to be aggregated in order to aggregate a pool of projects and do it efficiently and effectively. You've got to have relatively standardised processes. You've got to have your supply chain sorted out. You've got to have your sort of deal structuring, evaluation, execution methodology ready to move. And I think that's fundamentally why we have a dedicated energy efficiency fund, UK Energy Efficiency Investments, and that's all it does. It's fundamentally designed, and its team is fundamentally established to be efficient and effective at identifying opportunities, coming to the right solution for the problem, structuring it as close as we can get to standardised contracting and execution. But then you're left with, you're quite right, a series of transactions which individually are limited in size, but in aggregate can be scaled to a reasonably attractive market. But not to demoralise you on the scale side, if you looked at the PFI, PPP, or sort of, without sort of wanting to use swear words, the infrastructure sector in the mid-90s, you would have had the same reaction. Hold on, there's nothing there. These are small projects. The equity capital associated with them is pinpoint effectively, and this is at best an asset market, at worst it's a pipe dream. Well, in 2006, when the National Audit Office tried to figure out if it had been good value for money and concluded that it had been at that stage, £63 billion worth of projects have been delivered with social infrastructure here in the UK. And the market has been recycled, refinanced, without indeed going down to your last point, which is making sure that the deals are structured prudently. So certainly our approach is to structure each deal in its own right, not to take an aggregated or sort of what some people have ever called a super ESCO type of approach to this. Each individual transaction has got to work in its own right. And that's both from our perspective and from the host's perspective. Correct contractual structure, the correct delivery mechanisms, and ultimately we'll build a portfolio which is sustainable and that can be refinanced later. So yes, I do believe that the risk management capabilities are there to avoid making the kind of mistakes that have been made in the past in other sectors.
I think there was a question at the back. First of all, the gentleman just round the corner, and then I think there's a lady just in front.
What about the issue that if public bodies can go to the cost of moving staff and machines out of the building, often having to advertise to the public that they've been moved, you're going to want to do everything you want to do to that building for the next 30 years, aren't you? So doesn't that make segregating energy efficiency unattractive? I mean, if I was leader of Glasgow City Council, thankfully for Glasgow regions I'm not, I wouldn't be keen on investing in one of my properties in such a narrow way.
Any takers? Tony?
Yeah, I mean,
Charles?
I guess we recognise that challenge, and I guess there will be some situations where that there's a relatively narrow range of interventions that make sense. There will be other situations where it's a much broader refurbishment, where it's less an energy efficiency investment programme than a refurbishment programme. Certainly, in the way that we sort of currently define energy efficiency projects within UK GI is, I guess, around a capital cost of a sort of target of £2,000 maximum per tonne of carbon saved, or £3,000 sort of maximum. And that's really designed to sort of give you a large enough envelope to be able to do a reasonable amount of work alongside the specific energy efficiency investment. So, if you're putting in a new boiler, you probably want to put in you may well want to put in a new boiler house and some ancillary work alongside that. So I guess it is a case of sort of where you define the boundaries and what specifically you want to do with the estate.
Yeah, I agree, and I think we're encouraging public bodies to look at energy efficiency as part of the mix of your asset management strategy, and therefore it's one of the things you'd look at in terms of determining with your assets, if you're rationalising them, if you're retaining them and moving people around, that build this into that total equation. I mean, I think there's public bodies have been tasked with reducing their building estate by a massive percentage over the next 5 years, and this is part of that overall strategic approach to that. There may be isolated situations where that your building you're going to have for the next X number of years, and you can go ahead and do something. But it has to be part of that mix because of the financial implications of what we're talking about here as well. So you're right. Looking at it in isolation could cause problems. So it has to be part of the overall mix.
I mean, I'll sort of agree, but also just put it into context. I mean, so yes, most building owners at least do look at this within a refurbishment life cycle, and even in the street lighting sector, within the context of corrosion on posts as well as the lamps and how they how much energy they use. But this is about energy consumption. Non-domestic energy efficiency is about feeling good about your home and about lifestyle. This is about energy. You wouldn't pick out one, you probably shouldn't pick out one thing to do in your building, like lighting, or maybe building management systems, or controls, or HVAC. Why? Because energy systems in buildings fit in with the other utilities, and so you have to take a rather holistic approach to how energy is being used in a building. So that's an argument against doing one single intervention without looking at other areas. But generally speaking, in a building, you can isolate the base load energy consumption of a building, what's going on in the fabric, meaning specifically the lighting, the heating, ventilation, air conditioning, insulation, building management systems, controls. So specifically looking at the energy consumption of a building is certainly feasible. And doing it in such a way that doesn't create a tremendous amount of business interruption. The hotel I referred to actually earlier on is about 90-95% occupancy per year, so that's a highly sensitive business. But nonetheless, an energy efficiency scheme makes sense for that building to cut energy and utility consumption. The second area which can be looked at is process load. So this is for manufacturing, motors, other forms of controls, and again, what we find with industry is that industry is, and indeed air circulation and heating, space heating, but these are measures that can be isolated and put through a building, not only without business interruption, but indeed by creating sort of better living conditions, better working conditions, and indeed improved worker health and safety in an industrial setting. So I think the answer to your question is yes, most people do consider their overall refurbishment life cycle, but that notwithstanding, base load and process load improvements, which are quite dramatic in most cases, 20-25% improvements can be achieved without business interruption, and in fact with an improvement in conditions and productivity.
Thanks. And actually, to take the example of Glasgow in particular, they undertook a joint venture with Serco Access Glasgow, which has enormously reduced their property footprint, which in turn leads to significant energy savings. I don't know what they've done in terms of the thermal qualities of the buildings while doing that, but the combination of improved technology and better space use will have pulled their energy bills down enormously. Time for one more quick question. I think there's a lady just at the back here.
Scottish Government working on climate change. I think it's a very simple question, which was at the workshop and when you've been working with clients, have the current policy interventions been mentioned as an incentive? So I'm thinking about CRC, for example, but other interventions as well. So are they acting as a driver for energy saving or not?
Is that the answer?
I'm happy to give a point of view while Charles thinks through the politics of his answer. But and I should actually say, as well, I sit on the advisory board for the Energy Efficiency Deployment Office for DEC and various other bodies. But my day job is to invest in this sector, and my day answer to that is not much. So, yes, the CRC energy efficiency scheme does actually create an incentive, particularly for bigger business, and indeed the, sort of other related incentives. That does create an incentive for business, and mathematically, you're looking at about 6% of the total benefit of a project can typically come through existing incentives which are out there. There are obviously sort of taxes and the climate change levy to take care of. There are tax incentives like the enhanced capital allowance, which is available as a tax relief for investment in energy efficiency in the UK. But this is all, I would say, relatively small and complicated compared to the bigger prize. The bigger prize today it pays for itself. An energy efficiency project will typically save more money than it costs within a reasonable period of time. The funding gap comes where that period of time is more than a year or two. In other words, it exceeds the sort of, it falls into the capex budget for a business rather than into the operating budget for a business, and indeed it crosses the Rubicon for public sector in terms of competition for capital, etc. So I think the answer to your question is yes, the existing policy incentives make a bit of a difference, but it doesn't make deals happen. What makes deals happen is it makes sense. You're cutting costs, you're improving the quality of the asset and even the value of the asset, and fundamentally it pays for itself. What we can do is provide the financing to make it happen, make sure it gets done at the lowest cost and the highest performance, and create a value for money deal.
Sure, and I think yes, it has at a senior sort of level within authorities in terms of understanding, yeah, this is something we should be doing, but actually in experience I've had from working with authorities on some of the initiatives we're looking at, ultimately it's the bit about saving the money that's got them to the finish line, and convincing an FD that this is actually worthwhile them doing is the thing that really makes, because there's very few things they're looking at the moment where they can really genuinely be seeing a saving of money over however long it is, 2 to 10 year, whatever it's going to be. So it does, but I think, and CRC helps in terms of the financial penalty, but I think on a lot of these things, the quick wins, it's because there's a financial benefit to doing it, which may not be a nice answer, but I think that's the reality of the situation.
I think it fundamentally comes down to the financial impact of these policies, which I guess varies from sort of sector to sector. At the end of the day, you know, the real driver is going to be a financial driver, and if you can then articulate the case of that, if that's understood, and the more easily you can then say, show how you can take that problem off their hands to solve it and generate the saving, the more inclination there's going to be to go ahead with that investment.
Okay, well, thanks very much. Can I thank all of you for taking part in this and for joining this breakout session. And can I ask you please with me to thank Charles, Jonathan and Tony for their excellent contributions. Thank you.